Sometimes you have one of those days where it just feels like you're bowling strikes. And I mean literally, bowling strikes. What's up, guys? All right, so time for a midday market recap. We're going to go over the trades from today, and I'm going to talk about a few of the questions that folks have been asking me on Facebook and YouTube in the comments. But first, let's look at the big picture stats. Big picture is that I'm finishing the day up $8,429. I traded 4 stocks, and I'm green on 3 out of the 4. Now, I also made $8,000 yesterday, which means I'm up $16,000 on the week, and I'm up over $50,000 on the month, and I'm now approaching $63,000 in my small account. This is the account that I started on January 1st with $583. So obviously, this small account challenge is going really well. It's now the $100,000 challenge, and my goal is to get to 100 grand, essentially as quickly as I can, because I've kind of got that, that finish line, and I just want to get there. But I'm 62% of the way there, whatever it is right now. It'll probably take me, I'd say at least through, the middle of March. I mean, I'm $40,000 away. So on the one hand, that's, 4 or 5 more days like today. But if I have one day a week, like as good as today, it'll probably be another month. So I'm gonna say hopefully by the end of March, I'll hit the $100,000 mark at the latest. And if I can get there a little sooner, then that would be nice as well. Of course, as soon as I get there, the only thing that's going to happen is I'm going to say, well, now it's the $200,000 challenge. I'm just going to continue growing this account. I'm not going to really do anything different, but it'll just be nice to get to that first, big milestone. Well, I suppose the first milestone was 25,000 because that meant I could open my speed trader account and close the short trader account. But the second milestone is going to be 100,000. So one of the questions that I've had from a lot of traders is, how do I cope with the fact that, I'm having these huge swings in my P&L? Thursday and Friday last week, I lost $9,000. Yesterday, I made back $8,000. Today, I'm up $8,000. But even on these days where I make money, here's a trade where I lost today $2,600. So some really big swings in the P&L, and how am I handling that emotionally? Well, what I've really worked towards doing is desensitizing myself to having a problem or a negative reaction when I experience loss. And I've had some big losses so far this year. I lost $9,000 between Thursday and Friday last week. I lost $13,000 2 weeks ago today. But I'm basically practicing experiencing loss and not having an issue with it. The more it happens, the more you realize it's no big deal. So yeah, I lost 13 grand 2 weeks ago, and it was disappointing. And since then, I made about $35,000 between that day I lost 13 and Wednesday of last week. I made $36,000, and then I lost 9,000. Okay, so a little step back. And now, since that $9,000 loss, I'm up 16,000 between yesterday and today. And I'd say the goal would be probably to make another 10 or 20,000 before my next big red day, if possible. I mean, obviously, as I say that, I'm going to knock on wood and hope that I don't have a big red day, tomorrow or this week. But to have big hot streaks in between the red days is obviously the goal. However, I have noticed that right after a big green day, I sometimes have a big red day, because I can get a little maybe complacent or a little overconfident. If you have a really big green trade and you think, wow, everything I trade is working, I can take 10,000 shares of this and 15,000 of that. Next thing you know, you lose 40 cents with 15,000 shares, and you just took a huge loss. So that's something definitely to be mindful of. But having said that, the second thing that's going on here with these big trades is that I've essentially added, a decimal point to all of my gains. Last year at this time, I might have only been up $824, down 267 on this trade, up 760 on this one, up 250 on this one, and 130 on this one. But this year we've got another decimal point. So the reason is because I've scaled up my position sizes. So for those of you who have been, watching me trade for a while, you know that last June was the best month of 2016. I made $34,000. And at the beginning of June, I created a set of rules. And those set of rules were based on the fact that May was one of my worst months of the year. And I wanted to do things differently. I wanted to really turn the corner and improve my trading. So I created two rules. The first rule was that I would only trade A quality setups, which is easier said than done. And then rule number two was that on any trade I took, I would take 2 times my average share size. So instead of buying 2,500 shares, I would be buying 5,000 shares at a minimum. And the thing is, when I was buying 5,000 shares, I started to feel a little bit more nervous because I knew if the trade didn't go the right way, the loss would inevitably be bigger. I'd be looking at losses in the range of $700, $1,000, or maybe even $1,500 on a regular basis. So because the losses were bigger, because the risk was higher, I became even more selective. And as a result, I really only traded A quality setups because anything less than A quality would make me too nervous. All right. So now I've basically done that same thing here in January. And obviously we're in February now, but starting in January for 2017, I said, okay, you're going to do the small account challenge. And you're going to put the pedal to the metal. You're going to be aggressive. You're going to use your margin, and you're going to try to grow this account as quickly as you can. First milestone is 25,000. Second one's 100 grand. And I was prepared that it may take me a year, but I think even when I said that, I was being kind of overly conservative because I knew that as soon as I got above 25,000, I would just basically be able to go back to the way I was trading in 2016, making 20, 30,000 a month. So once I hit the 25,000 spot, it would probably only be another 3 months before I hit 100 grand. The question was, how long would it take me to hit 25,000? And as it turns out, I was able to do that very, very quickly. I was able to do that by February 1st, and I think that was on, it was 5, 10, 15, 20, 25. I think on day 26 or day 27. It was day 27 that I hit 25,000. And here we are today on day 30, and I'm at 62,000, just under 63,000. So you can see that as soon as I broke over that level, the gains started to become exponential because my buying power was higher, and I was able to really start to be more aggressive. So last year, at the end of the year, I reviewed all of my trading statistics, and I recognized that I had a really good year, made $222,000, and my average profit-loss ratio was about 1.5 to 1, meaning on winners, I would make 150, and on a loser, on average, I would lose 100. That wasn't the actual dollar amount, but just for the sake of easy numbers. That was my average profit-loss ratio. And my accuracy was right around 65 or maybe 66% success. So I had to ask myself, once I, kind of made some progress in this small account challenge, what would I have to do to increase my profits for 2017? What if I wanted to have a goal of, instead of 220,000, 300,000, or 350, or 400,000, or even $500,000? And looking at my metrics, the answer was that I would have to increase my share size. I would have to be more aggressive on my trades. Well, number one, either be more aggressive on my trades or simply trade more. But I have found that I trade the very best between 9:30 and 11:30. So although I could start trading in the afternoons, I didn't feel that that was necessarily going to be the solution. I felt the solution would be trading with larger size, being more aggressive, and also moving in the direction of longer hold times, where when I see a stock that has a really good setup on the 5-minute chart, I get in, maybe I take 10,000 shares instead of 5,000, but I get in, I hold my position, and maybe this year I'll actually be holding for like a 1 point or even a 2 point move on one of these parabolic stocks. And with 10,000 shares, that's going to be, a $15,000, $20,000 winner. So by employing that strategy, I've been able to have some of my best days ever. Last week, actually not last week, the week before, I had a $22,000 winning day. So, that was absolutely incredible. And it was 100% the result of taking large share size. But, then having a day where I lose 5,000 or 10,000 is also the result of that big share size. So for comparison, last year at this time, I was trading with around 1,500 shares on average. So obviously some of my trades were, bigger share size, some of them were smaller, but the average was about 1,500 shares. So now let's compare that with so far in January. My average share size in January, 6,000 shares. So obviously if that's the average, some positions are only 1,000, others are 15 or 20,000. I don't think I've taken a position larger than 20,000. I don't see one here. There might be one, but for the most part, that's been my cap. That's kind of my share size limit is 20,000 shares. So with, by increasing my position size times 4, am I seeing 4 times as much profit? So let's just look. In January of last year, I made $10,000. In January of this year, I made $40,000. And in February last year, I made only $5,000. And February of this year, I'm up right now $53,000. So this tells me that, yes, I am making more money because of scaling, because of taking larger positions. Maybe the market is a little bit better this January and February than it was last year. That's certainly a possibility as well. But the end result is that being more aggressive, at least so far in the first 6 weeks of the year, has produced bigger wins. And you know what? This all comes back to your metrics. So if you have positive metrics, meaning you've got a good profit-loss ratio where you make more on your winners than you lose, and you have a good percentage of success, your accuracy is good, then you will be a profitable trader. So it's your choice now whether you want to implement those metrics on a strategy where you take 100 shares per trade, or where you take 1,000 shares per trade, where you take 10,000 shares per trade, or whether you take 100,000 shares per trade, right? If the metrics are sound, then the number of shares you take is just going to give you basically the calculation for how much money you make. The metrics will be the same regardless of your position size. Now, the actual reality is that this strategy, although it's scalable from 1,500 shares on average to 6,000 shares on average, I'm not sure that it's scalable to 12,000 shares on average, or 20,000 or 60,000. I mean, there will be a point where I simply cannot buy 100,000 shares of these stocks. If my goal was to buy 100,000 shares of every trade I was going to take, I would have to even further tighten my quality filter. And I would have to increase my volume and liquidity filter to only trade stocks that had probably in excess of 10 million shares of volume on that day. It may even be more. But, a trade today, for instance, ZAIS, this has 23 million shares of volume. And if I had wanted to take 100,000 shares, I would probably have to get in 10,000 shares at a time, pressing the order 10 times. Most likely, that would have been the safest way to get in. And I would have had to, spread out those orders over the course of, 15 minutes or something like that. So that would be buying, accumulating during consolidation. So a period on the chart, like this, where we're seeing consolidation, is a period where traders with deep pockets would be thinking about accumulating and buying. And then when you get that breakout, this is the area where they would start putting out orders to sell 10,000 here, 10 here, 10 here, 10 here, 10 here, and scale out slowly. Because again, you can't get in all at once. You probably can't get out all at once. So yes, if you wanted to take that level of, those types of position sizes, you would have to make some adjustments to your strategy. And I've even had to make some adjustments to my strategy because taking 20,000 shares is not the same as taking 2,000. Even with 20,000 shares, I get in increments of, usually 5,000 shares or 2,500. So I buy a little here, I buy a little there, until I've built up this core position. Because just pressing the buy button for 20,000 shares, there's not always a seller that can match that order. So you can't always get filled, at the price that you want. So you kind of have to do that process of accumulating. And maybe that's good training for taking larger size down the road. But the other side of that is that if you're taking 100,000 share positions, your risk is substantial, right? If this trade goes against you and you lose a point, you're going to lose 100 grand. And my biggest loss so far this year is 75 cents per share. So with 100,000 shares, that would have been a $75,000 loss, right? That would be pretty crazy. Now, I think on that trade, I had 10,000 shares and lost 7,500, which was bad enough. So this is just to say that, I may be in a comfort zone right now where I've desensitized myself. So losing 5,000 or even 10,000 is not a big deal, but I'm definitely not in the place where I could lose 20 or 30 or 40,000 and not be really upset about it. So this is, kind of the emotional development that every trader has to go through. When I was, a little bit of a newer trader, losing 700 or losing 1,000 was devastating, and making 1,000 or 2,000 was incredible. So at this point, losing 700 is nothing, losing 1,000 is nothing, and making 2,000, it doesn't do anything for me. I don't get stressed out. It's just part of the regular day of being a trader. And I'm sure that there are traders out there, I know there are for a fact, that can lose 10,000 or 20,000 or even $50,000 in a day, and it's not a big deal. And on a good day, they'll make six figures. There are traders that are at that level, and that's not me right now. But I feel good about where I am today, and that's the important thing. I think that everybody is able to say that you feel good about where you are today, and maybe you have a goal that in 6 months I want to be a little further along in my development, and that's okay. So what do you have to do to get from A to B? You have to be more comfortable with experiencing loss. You have to test your boundaries a little bit more, test the outside of your comfort zone, and you will have some days where you're kind of feeling a little bit bummed out. You have a big loss, and then you realize the next day when you make it all back that, what, it's actually not that big of a deal. That happens a couple times, and now suddenly you've conditioned yourself to be okay with that loss, whatever it might have been. Okay, so that was kind of a long intro to our midday market recap. Now, to go over the trades that I took today, obviously it all starts with the gap scanner. And the gap scanner today wasn't giving me a lot of really good looking setups. So I'll go back on this to historical date. I'll do 9 a.m. this morning, and you'll see exactly what I saw this morning. So we had a CYNO, higher price stock, 65. We had RLOG. This is a cheap stock at $1.25. Now we had CBIO at 11.55. And this one I actually had on close watch because it's a recent reverse split. So recent reverse split, and what we saw with some of these other recent reverse splits have been some parabolic moves. That's obviously not what happened on this one. This one opened at 11.50 and it promptly dropped, 40%. I mean, just really brutal. But then yesterday or the day before, we saw this KBSF, also a recent reverse split, and it gapped up the next day and went all the way to a high of $18. So I'm not sure what the rhyme or reason is why this one worked so well. Both of them have now faded, and so certainly good for shorts. But this would show you that if you're too early on your short position, you get squeezed 4, 5, 6, or even 8 points, as these sometimes are incredibly strong. So when these stocks do reverse splits, if it's, let's say it's 10-to-1 reverse split, the stock was trading at 30 cents a share. So if you have 1,000 shares, they're now going to give you 100 shares, and the stock will be trading at $3. So they convert all of the shares. It's a reverse split, and the stock price goes up. This is usually to maintain compliance with the exchange where they have to keep their stock priced above $1. But what often happens is that we get the reverse split. The stock is now priced at $3 or $7 or whatever it is. And traders start to sort of jump on it. They see this new stock that's now suddenly in our wheelhouse of being affordable, starts to squeeze up. And, I'm not sure. It seems that these stocks can make these really big moves right after a reverse split, and that there's almost like sometimes no resistance, that they just start really squeezing. They move up, 400, 500, 600%, and then suddenly we have a, secondary offering that comes out that's priced, somewhere in the middle of that big move, at $6 or something like that. And we've seen this several times on stocks that do reverse splits. So, I don't know if there's someone that has really deep pockets that is kind of propping up the stock in anticipation that this will get a reverse split, it'll get a squeeze, then there'll be a secondary offering. I don't really know how it all works, but it's the pattern that we've noticed. And so it's something that I'm definitely keeping my eye on. When I see a stock that's had a reverse split, I'm thinking about the potential that this could get a squeeze. But obviously, CBIO, it didn't happen today. So that was on the list, but no trades on it. Next one down, Sino. This was on the list, but the issue with this one, it was consolidating pre-market, but I said, guys, look, I have a feeling the bell is going to ring. It's going to pop up to the $0.50, and I think it might break over the $0.50 of 550, which would typically be my entry, but I think it's going to be a fake out because of this. Look, it already had all overnight to break out, and it didn't, and traders were watching it. So I think it's probably going to pop up, and then it's going to roll over hard. Market opens, and it does exactly that. I didn't have shares. I couldn't short it, so I was just watching from the sidelines. So no trades on that, no follow through. But as a result, all of the sympathy stocks in the same sector, the shipping sector, they all faded as well. So we had DCIX, no trades on this one. We had GLBS, no trades on this one. There were a couple others, no trades on them as well. All right, so Sino off the watch list. Then we had RELV. RELV, I said, this is one that I like because it's consolidating under 7. And yesterday it had a pretty big day from 450 up to 583. Consolidating under 7, it looks good to me to get in over 7. The bell rings, and I've got my order ready to buy this thing at 680, 5,000 shares. I press it at 680 as it's popping up through 7, and guess what? The order was rejected. It was rejected and it said the security was not tradable. I called Speed Trader and I said, what's up? This says it's not tradable. Can you guys check it? He checked it. He said, yep, sorry, that's an error. I fixed it. You guys, it's going to be, I've got to update the system, but it'll be tradable in just a moment. And that is what happened. But of course, in this candle, it popped up to 791. So imagine that 5,000 share starter position from 680. Maybe I would have doubled at 7 and had 10,000 shares. That could have been a $5,000, $6,000, $7,000 winner right in the first minute. But I missed it. And this also goes to show that these setups will run with or without me. If I'm not part of it, it's going to go. If I'm away for the day or I'm just not trading for the day, these will still break out without me. They'll just continue to run and I'll miss the opportunity. This is an opportunity. So we get the pullback here, little pullback. And let's see, I'll show you where I finally decided to get in. So we get the high, we get the move up to a high of 850. Now, as soon as he turned, as soon as the guys at Speed Trader got this turned on, I was looking to jump in. I got in at, let's see, right here for the break of the $0.50, 750, 741, 750, and then I added at 799 and $8. We spiked up to a high of, let's see, 831, pulled back for a moment, and popped up to a high of 850. Now, unfortunately, despite the fact that it went up as high as 850, I wasn't able to sell at 850. I sold at 811 and 803 and 793. I was looking for a bigger move. And obviously, if I had gotten a good entry at 680, I would have been, I would have done a lot better. But I got in a little high, took the profit. as it came back down, wanted a bigger win, but in any case, got a decent trade on the name with what was it, 2,500 bucks. So 2,500 bucks, not bad. Again, and this is 2,500 bucks at this point is almost like 250. Like it's a good trade. It's good. It's not great. It could have been better, especially for the fact that this moved from a low of 661 to a high of 850. We ended up consolidating here and popping up through 883, and then we rolled over up here on this red candle. So, a couple good opportunities here. I wish that it had been a little cleaner and it was able to hold those levels. As you can see here on the daily chart, it ended up rolling over. Right now, today is looking like a doji candle. So it wasn't able to really hold those levels. A little annoying there. Next trade, ZAIS. I got into this one and 12,500 shares. I jumped right in at let's see, I think it was 340, 345, looking for the break of the $0.50. And interestingly, this popped up to a high of 370 and then pulled all the way back down to 331. It was not the cleanest right away. And although I made money on it, $1,300, it just didn't feel super safe. And then next thing you know, it pops right up and goes back to highs and then all the way up to 444. The interesting thing on this is that during this consolidation, I was looking for a little bit of a bigger pullback. I was hoping to see 2 red candles, but we only had 1 red candle. 2 red candles would have been a little bit of a better pullback and I think a little bit of a safer entry, but we didn't get it. Now up here, we start to get consolidation and I'm looking for a pullback entry, but we don't get it. And then we drop down to the 9 moving average, consolidate, drop down to the 20, consolidate, and then in this period, we started to ramp back up. Once we got above the 9 right here, we pull back, consolidate, and then this is where the volume came in as we squeezed up from 375 up to $5. I mean, that's a big window, $1.25. This would have easily been able to take 25,000 shares through this move. There was 700,000 shares of volume on that 5-minute candle, so you could have taken 25,000 shares and potentially made $25,000, maybe more. I missed this trade as we were coming into the lunch hour, and I really didn't expect it to bounce off the 20 moving average so nicely. I was impressed. This one will actually be one to watch tomorrow for continuation, because if this closes around this level, there's a good chance that we'll gap up overnight and we'll end up opening around 480, 490. And if we break yesterday's high, well, today's high, if we break today's high tomorrow, we could have secondary follow-through continuation up to $6.50, $7. That's back of my mind potential. So we'll definitely keep this one on watch tomorrow. I'm not sure if it'll follow through or not. All right, so then let's see. The next one, AHPI. This one's on the high day scanner. It starts to spike up. I jump into this one, 10,000 shares. I get in. Now this was actually very annoying. I bought 1,000 shares at 250. I wanted 10,000. I only filled 1,000. And this is one of those times where I said, you know what? This thing is so strong. We're in a strong market. ZAIS was just running. I think traders are probably going to jump on this. This looks like the next stock to start opening up. The daily chart looks good. I jump in. I figure I'll just chase it. I don't know why that seems like a logical decision. Got in at 72. It popped up to 280, and then it came all the way back down. I stopped out in the 40s. So I lost a solid $2,600 on this. And, you could ask, why did I hold it this long? I held it through this pullback here. First candle to make a new high was right here. We came back up to break even. And I was like, okay, break even is good. Maybe this will go back to high a day. And then in this candle, it dropped all the way down to 48. And so that's when I sold. I mean, what can you do? I mean, it's just, actually, I think I sold on this candle. But in any case, I thought it would run. Looked like it had the potential, but traders just weren't interested in it for whatever reason. It's not maybe a former runner, not a very popular stock, doesn't have a cult following, and that was probably the issue. So after that trade, I was up only like $900 on the day, and then APOP started popping up. This is a former runner, very much like MYOS. I'll pull up the MYOS chart real quick. A former runner, stock with a history of making big moves. You can see here this MYOS. So as this started, APOP started to pop up, I said, this is one that I need to get into as quickly as possible because it has a history of making big moves, right? It's got a history of making big moves. It has a great daily chart. The nearest resistance is 677, and if we can break over that level, we've got room to 878. So I said, this is it. I'm going to jump in. I jumped in, even though it was already up from a low of 530. Me getting in with a 586 average was pretty high for sure. But at the same time, back in my mind, potential was that this doesn't have resistance until 677. It ends up getting halted at 602, spikes up, it gets halted, it resumes higher, it opens at 619. I added another 2,500 shares, it spikes up to a high of 675, and that was the moment of truth. Will this be able to break that level over 675 into 7, and now we've got room to 878? Now, unfortunately, it couldn't do it. It ended up pulling back. But, even right now, we're still up at 634. Even if I was still holding my current position from 586, I would still be in the profit because this is a daily breakout. This is the first candle to make a new high after this consolidation. Resistance was 677. Above that level, it's got room to 878. There's a good chance that this will open tomorrow. Again, like ZAIS, if this opens around 640, 650, I'll be watching it tomorrow for a break of today's high, a break over 677, and the next logical resistance point is 878. So, whether that happens tomorrow or it doesn't happen for a couple weeks, maybe we consolidate, we pull back again. Either way, this 677 spot will be something to definitely keep an eye on. And in any case, this went from my 586 average all the way up to 675. We pulled back. We made a second attempt up to 666, and then we came back down. And on this candle, I stopped out of my final position. But with those trades there, I took 2 trades on the name, $7,609. So great opportunity. A stock that's a former runner, has a cult following. Traders know that this is one that can move. And when I saw it starting to spike up, my thought process was, I don't want to miss this opportunity. And I think that's what a lot of traders are thinking when they see these stocks spiking up, like APOP, like GLBS, like MYOS. Last year, or in the last few years, we've had other stocks that have had that similar type of cult following, like DGLY, or Lake, or what's another one? HMNY, LEDS. There's been a handful of those stocks that anytime they hit the scanner, they seem to get these exaggerated moves. Traders just jump on it. Well, why do they do that? It's because, the last time that stock made a big move, or the last time that stock hit the scanners, it made a big move. And if it, is going to happen again today, I don't want to miss it. I'm going to get in. I'm going to try to capitalize on it. Last time it made a big move, well, today I'm going to get in and I'm going to take a bigger position to make more money on it. You multiply that across, all of the day traders out there, and that's when you start to see these really exaggerated moves on some of these stocks. So anyways, some good opportunities there. And in total, 5 trades today and 5 trades, and actually today only 3 winners, 3 winners and 4 losers. So accuracy, not as good as I'd like it to be. Accuracy is still a little on the low side this week, but the profit loss ratio is decent. The share size has been pretty big, and that's allowed me to generate some good gains. So here we are, Tuesday, up 16,000 on the week. That positions me really well for Wednesday, Thursday, and Friday. Hopefully we can finish this week strong and make another dent towards the $100,000 milestone. All right, guys. So any questions, feel free to put them down in the comments on Facebook and YouTube, and I will see you guys all first thing tomorrow morning. All right. Thanks, guys.
Let's be honest. If you made it this far, you must have really enjoyed that video. So what's stopping you? Subscribe right here and get email alerts anytime I upload new content. Until then, happy surfing!